I hope everyone's doing good. Welcome back to another lesson. So this is going to be the third lesson in the intraday trading series. So the lessons, including this one, now will start getting a bit more, I guess you could say, applicable. You're going to find it easier to, understand some of the things I've been talking about because I've been introducing them as concepts. I've been showing you guys what they look like, how to use them individually, but now we're really going to put a focus on bringing everything together. So in regards to bias, before we start with this episode, one thing I want to say, right, bias it's an ongoing thing, right? Of course, in the sense, one, you're always going to need bias in the market to trade, but two, in terms of your ability to deduce the bias from the charts, it will get better over time. And sometimes all it literally requires is more chart time, more testing, spending longer on the charts, actually seeing everything play out. And this is another reason I like to only trade one or two pairs, because I find it very easy to get in sync with them, keep up with what's going on. But today, I'm going to be talking about how we can catch entries on the charts intraday and what we're actually looking for, the sorts of framework. So let's start. Let's start with a weekly and daily profile, right? So cool. Now let's imagine we've decided our bias. We're like, okay, yeah, it's going to be a bearish week, a bullish week, right? Let's go with bullish because our example here is bullish. We need to understand where we are in the week when we say time and price, right? Cool, bullish week, but does that mean the week opens and goes straight up? No, we've already, studied contraction and expansion. We have to understand where we are in this. Are we in the contraction? Are we in line with the expansion? What's more favorable to trade? I already spoke about these things. It's favorable to trade this expansion. We want to get that upwards move, right? So what does this mean? Typically, we'll just leave Monday alone and we'll start trading on Tuesday, right? We'll wait for that probable high of the week to be put in before we start trading. So again, first we build that framework. We look at all our time frames, look at monthly, weekly, whatever, right? We see what price is doing on a high time frame. But when we're actually trading, we need to zoom into our week. Let's just think about the current week, the running week. Where are we in this week, right? And I'm going to show you guys with our actual current week in a second. And I'll show you guys, come back to this and you'll see what I mean. Second, we need to consider our daily range, our daily candle. Again, price opens, very similar. Are we in the contraction? Are we in the expansion? Where are we? Time and price again, right? Hear people say this a lot. You have to use both. There's a reason we use kill zones as it's written there. And of course, we need to pay attention to news. All these things matter, right? Cool. Like the idea, is it a bullish day? So again, this is a bullish example. So it's a bullish day. We want to see the low of the day get put in. And then it's much more favorable to look for longs, right? Once that low is put in and you're confident that it's probably going to be the low of the day, it's easy to look for shorts. You can go on your lower time frames, you can look for them. And the last thing, again, as I mentioned before, we need to consider news. The delivery of price, the ADR, these small things I've taught you guys, we really have to bring them together to understand, where are we? What do we expect from price today? Some days, for example, if it's a day before FOMC, am I surprised if there's a very small range day with very, boring price action? No, it's setting up for the news tomorrow, right? And then what will happen the following day, let's say it is FOMC as an example, you're probably going to get an ADR that's above average. We're going to have the delivery of that kind of price action that we didn't deliver yesterday into the next day. So the next thing I want to actually, get into a bit in depth in this episode is our entries. So now I've taught you guys that framework, what we're doing outside of our actual trading when we're building this narrative and bias. Let's actually get deep into our intraday trading now. So I've shown you guys the sessions, right? Showing you guys New York midnight price. And I've given you a small idea of what they do. London has this Judas swing, forms a high or the low of the day typically. And then, of course, New York can do the opposite, build the opposite end of the range, and then price will come back in. Before we actually jump on the charts, that's one thing I also want you to notice, right? Look at this candle. Look at both of them, right? They both open. We have contraction, we have expansion, then we trade back in. What's similar? It's the same order. Price is fractal. The daily candle, forms quite similar to a weekly candle. We typically start with expansion. Expansion is early. Oh, sorry, contraction. Contraction is early on in the candle, and then expansion takes up the majority of it. Then, of course, we contract again toward the latter end of the candle. But I know I got a bunch of words on here: confirmation, continuation, reversal. Then, of course, these previous daily low, previous daily high, previous weekly high, previous weekly low. So let's get into this, right? Let's hop on the charts. Okay, cool. So let's look at this week, right? This is the Monday. Let's zoom in a little. This is our Tuesday, Thursday, and Friday. So now, Tuesday was, quite a strong move, and we'd expected that the high of the week has put in. But in reality, it put in the low of the week. As you guys can see, it formed the low here, right? And Wednesday, right? Because now, if Tuesday is forming the low of the week, what does this mean? The week's bullish, right? So Wednesday, expansion, and Thursday offered a move even higher. So now, in reality, I'd want my, Friday to trade back into the internal weekly range. But there are some orange folders for USD tomorrow. So it is possible we might get one, little push higher. Possibly take out these highs since now they're relatively equal. Show you guys. So this is me, of course. I don't trade Fridays, right? But this is me just now coming and seeing, what is price doing? What has price done so far this week? And that is very similar to how I will read the daily candle. And I explained this in my previous video. Right, just for a quick recap, I'll open my charts. Let's delete this. I'll open my chart. I'll see what Tokyo has done. Asia offered a range. And I'll see, by the time I'm on the charts, it's like here. So now it's like, where's New York midnight? Have we had a run below or above? What's the London Judas doing? And of course, then what I expect from New York. So, looking at a daily candle, right? We have an idea of what we want these sessions to do. We understand where we are in the weekly candle. And of course, on our actual daily candle, we'll take in whatever price action has formed so far. So for me, typically, Asia has formed usually, and I'm towards the start of London. So what do I look for, right? What do I mark out? So this is our Thursday. This was today's price action. I would have marked out this. Of course, you guys understand the candle opened here, right? This is the open of the candle where my cursor is lined up. What's very close to us? The previous daily high, right? PDH. So let's mark this. And let's also come to our weekly time frame. So we ran the previous weekly high. The previous weekly low. Let's go back to our daily. So you ran the previous weekly low, right? That formed daily equal lows. And we had a reversal. This is what we anticipate. This is something we actually like to see, right? We want that run on liquidity and we want to see a reversal. And again, the market's fractal, right? We had a run on the previous weekly low. So what did we do? Traded lower and we reversed. Over here on the Thursday, right? Let's zoom in now. Let's turn this off for a second. This line is my arrow. So what do we have? We have a run on the previous daily high. Then we have a move lower. Let's come out to our full hour. So, if the day has started, I'm looking for my high time frame points of interest around price. Right? I've always mentioned this to you guys. that 4 hour and above is why I consider, higher time frame. When this candle opened, there would have been a small imbalance here. That's where my eyes would have drawn instantly, but that is very tiny. That's easy for price to fill. From the open of this daily candle, Thursdays, to this imbalance left on the daily chart, I believe that's only around 12 pips, 13 pips. But on the 4 hour, we had this large, this large imbalance. We understand, right? Going back to basics, price has formed a range. In this range, what can we consider? Of course, this fair value gap and this order block is what my eyes would have drawn to personally. I like, price came in here, and I want you guys to notice something. I'll get into this teaching later. So I want you to notice for now. I will teach this, but you see how this candle, if I line it up, essentially came to where this wick is. There's reasoning behind that, and we'll get into it. We can expect price to come through this imbalance as it did. So now, just in a general sense, price is delivered to the discount, and as I explained in the previous videos, if we're bullish, price delivers to a discount, we expect to move away. So now my target will be this high, right? But I'm expecting price to remain bullish. So now that I have that in mind, right? This is after the day is done, by the way. So, this is going into the Friday. I don't really trade Friday, but this is just building the general idea again of what price is doing. So let's get rid of this fibs. So now let's talk about our actual entries. I'm going to drop a time frame. I need to come back out and draw the previous daily high once again. So now we've built that idea of what price is doing, right? This was my idea about profiles. The question that's being posed is when. Something's happening, price is doing X, Y, Z, but when is it doing it? Because that's the significance, right? We know this based on probability. Oh, price just swept the previous weekly low and it done this on a Thursday, and we actually formed the low during London Judas for that day. Does that make sense? How we're bringing the things together, right? So what I just said, for example, theoretically, does that sound like a probable low of the week? I think it does. Sounds pretty good, right? In fact, where's it gone? Okay, cool. I just wanted to check if the low of this week, again, it was formed on the Tuesday, right? I want to see if the London Judas made this. The London Judas didn't actually make this. It was actually the expansion from London to New York that made this, and then we traded back into the range. The next day offered a bullish move. Did get this, this Judas here. Of course, the swing up. You come to our day here. So, right. So going into this day, what am I thinking, right? Today's Thursday. I took one trade today. I took a loss. Just for starters. So anything I am, about to show you guys in terms of trades is hindsight. When we're looking at this chart, I've now opened the chart. It's a Thursday. What do I know Thursday to do? Again, coming back to that idea of profiles. Thursday is likely to make the opposite end of the range, right? And what's likely to make the high of the day? London, right? London Judas. On top of that, what are we very close to? Previous daily high. When we ran the previous daily high, I would have searched for a market structure shift. Let's start by drawing. I believe it's here. Yep. New York. So as you guys can see, right? you could have potentially caught this initial move potentially on a lower time frame. To me, I don't like the looks of this. You see how, of course, we run the previous daily high and we have displacement, right? But we don't displace to the low. We don't take that low out straight away. We kind of stop just before. Seems we find resistance at this order block, or support, sorry. We react a little and then we displace lower. Cool. But I also understand that we have New York midnight price. We run below New York midnight price, and here is where we have, a market structure shift with displacement. We also have, this consolidation. This here was a market maker buy model, right? Morgan is going to upload a lesson today where I go over market maker buy model just very briefly. But this initial consolidation, leg up, consolidate, leg up, consolidate, then we have this reversal here. Get this reversal, price comes OTE, price drops. My target would have been this if we were trading this. So let's go over that again, right? Price runs below New York midnight. So here we could have even looked for longs. For example, this didn't offer a trade. This didn't offer me a trade. And of course here is where we saw a reversal. So a trade again was not offered. So this price action was a bit weird today. Of course, Powell spoke today, so it just made the price action very wicky and volatile at times. As you guys can see, look at this displacement. That's not, I guess you can say, normal for price. Of course, we have returned and filled basically all of this imbalance now. These are places I'm looking for entries. So to start off again, our previous daily highs, previous daily lows, our previous weekly highs and lows as well. But they're more on a weekly sense, right? Just building a framework once again. But our previous daily high and low usually is very, very relevant to the intraday trade on the day that you're seeing the run on it. Because as you guys can see, we have a run on the previous daily high, have a strong market structure shift. We take out this low, we retrace OTE, and then if you entered in trade somewhere here, we displace low. So this is not an ideal trade to take. I don't like this accumulation. It wouldn't have nice. I most likely would not have taken this trade, but it would have been nice to target Asia low as we formed relative equal lows. Bit of a trend line. I know it's only 2 taps, but retail consider this, a trend line. So that would have been a nice target. I'm gonna move to the previous day. Let's talk about this now. What I want you guys to notice on this day, there's equal highs at the top of Asia, right? And we formed this clean trend line. Very clean. We didn't have a run below New York midnight, so I wouldn't have liked to take a trade during Asia. I wouldn't have, liked to long up here. And as we were shorting down, I explained I did, I believe, catch trades on this day. So Wednesday, yeah. It's the Wednesday. So this is the day I gave a breakdown for, right? I explained to you guys how we took trades. And there was a trade that Morgan sent out, right? We took out Asia low, took out these equal lows, and we had a market structure shift on the lower time frame. So on the 3 minute and the 1 minute, we have a market structure shift with very strong displacement. And why is there displacement? Literally all these candles are up, up close candles from here to the high. It's not a down close candle until we start getting a retracement. And to me, again, I said this on the group chat, it's there. I don't want to take this trade because there was no 5 minute market structure shift. I wanted to see a 5 minute market structure shift. I wanted us to take this higher. So let me just zoom in a little, just so it's clearer. I wanted to take this high. But of course, displacement, lower time frame, there's a very clear market structure shift. what happens? We retrace to the discount, right? I believe we tapped into a 1 or 3 minute fair value gap, and price takes out these equal highs. When we take out these equal highs, it can act as a confirmation, price is bullish now. Remember lesson 1, again, always goes back to basics. When we're respecting lows and taking out the highs, uptrend. When we're respecting highs, right, we're not going above the previous high, but we're taking out these lows, downtrend, right? If you set this trade, if you got involved in the move, right, we can go, I believe it's somewhere like here, let's just eyeball it, because if I drop a time frame and I scroll, it might take a while to come back to this. But let's just go with that, just below the low. And we can target this Asia liquidity. This is the Asia BSO. This is about 5.5R trade. Right? This is a logical target. Because we'll be taking this out, and we'll be also be taking this out. So retail consider this resistance. So it's in hindsight, of course, because I didn't take this trade. It was a very obvious trade. So now let's break this specific trade down. Right? Let's zoom out a little. Cool. Oh, wrong chart. It's a weekly. Let's get rid of this. So now our bias was wrong because we expected a bearish week to start with. So again, this is in hindsight, right? But when we're in line with price, this is how we can start to build our case. This is Monday. This is Tuesday. Tuesday is likely to form the low of the week, right? We have a run on the previous weekly low, so we are anticipating reversal. And now that's a bullish week, right? What do we want to see Wednesday do? Expansion. What do you want to see Thursday do? Expansion, right? We've learned these things. So now let's come back. That's our Thursday. These 3 boxes is the Wednesday. And this is our Tuesday. So if Tuesday has a high probability of pointing the low of the week, we can assume that, this low will not be taken. We don't want to take the Tuesday low if this is a bullish week. Again, like I just said, the bias for this week was wrong, as in my bias was. I expected a bearish week, but instead, of course, we have the framework of a bullish week. So when we took these Asia lows and we see this market structure shift on a lower time frame with displacement, and it's during a kill zone, very important to note, it's during a kill zone, that matters, right? In hindsight, it was an obvious trade. Morgan didn't send it out as an official trade, but he sent the chart in and he showed, he was looking for this, and of course price moved off. The fact that you knew, right, is you guys something interesting now. Let's mark out that trade again. Okay, sure. I target Asia high because it's an obvious target, right? That's nice. Let's just move it there. Something like 5 or something like that. Right, we're just going for estimates. If, right, you've taken the Asia sell-side liquidity and you don't have targets lower than this now, right? And you've built a very, very suspect trend line that is probably going to get swept, so you're now bullish, right? And we also know we have equal highs at the top of Asia, and we can say triple equal highs if we count this New York high. Yeah, so is it probable we're putting the low of the day in here? I'd say it's fairly probable. If you recognize this and you understand this, right, why am I saying this is the low of the day here? Because this is a bullish week. Once you recognize it's a bullish week, you can recognize, Thursday is likely to put in the low of the week. Now that you've seen Thursday really push down hard, now you can think, okay, yeah, Most likely we put in the low of the week. If you put in the low of the week, are you likely to break this? No, because then you have a new low of the week. Wednesday's job is to offer expansion, right? So what do we expect from Wednesday now if we know it's a bullish week? Bullish price action. So the literal day, if you recognize the framework that I just went through, like the last 10 seconds, now you're thinking, okay, this day will deliver bullish price action. Now let's consider ADR. If you now know that we've placed the low of the day towards the end of London, start of New York, and you're confident, what can you do? Add your ADR to this, right? EU on average has 100 pip ADR. Of course, we don't just blindly drag this 100 pips. Currently, this is a 46 pip take profit, and it's 8.1 pip stop loss. So in total, this is around 54 pips movement. From this low, let's imagine we can add 100 pips. Where can we place targets? Logical targets, right? We're looking for logical targets, not just targets for the sake of it. We have this cluster of highs, right? We know this is a nice liquidity pool that we can target. So what can we do? We place our take profit here. Still, that's only 78 pips, and we know we have news. So if price is moving in line with bias, which it is, and it would have been evident, what's the next logical target? What is that? That is the previous daily high, right? I wouldn't have set targets further than that personally. Realistically, I wouldn't even have gone as far as this to take the previous daily high. But once you consider ADR, you can realize, it is very, very easy for price to come and take this high. Guess what? Absolutely ripped through the high. And we pushed and we made a high of the day during New York, right? So that trade would have been 12R. And of course you would have cashed. It would have been 12R. You would have taken good take profits here. This was a beautiful take profit. Probably I would have closed the whole trade here if I was in it. But what I want you guys to understand, right, in this lesson, what I'm trying to show you, we have to build that idea of logic. We build this framework. We consider where we are on the weekly. What day is it? What do we expect this day to typically do? Probability shows that certain days do certain things. Okay, cool. Now we're trading, and we know today's a Thursday. What does Thursday offer? Thursday offers expansion. Wednesday gives us good expansion. But Thursday also puts in the opposite end of the range. So, you expect your Asia to range. You want to see a move upwards, in line with your bias. And of course, you want to trade back in. So now, is it probable that this is potentially the high of the week? It is. There's a chance it is, right? But we also recognize there's news tomorrow, and we consider all probabilities. Today was really a no trade day for me. And again, I did say this. I took one loss today. And looking back, shouldn't have been trading, especially with power news coming up. It just didn't make sense. So that's where that aspect of considering news comes in. Certain times, of course, it will be very obvious what news is setting up to do. But when price is moving like this, wick up, wick down, massive wick up, strong move down, then strong move. See what I mean? Like, it's very volatile. And sure, some people probably did catch this move. But these aren't favorable, trading conditions. Favorable trading conditions when we have a clear trend, when we have these clear biases, and there isn't news in the way to disrupt this flow of the delivery of price. So day to day, just recapping one last time. Build the framework. Mark out your previous daily high, previous daily low. That's where we anticipate reversals. Once we sweep them, we look for market structure shifts. Of course, swept the previous daily high, we get a market structure shift. We also look for displacement. Displacement isn't just for intraday. That's just a general thing. It's showing you, in a way, the intention of the algorithm, where price wants to deliver next. The other place we look for market structure shifts is high time frame points of interest. Right? Consider this 4-hour fair value gap. Right? Makes sense? Because we come in here, we reverse, we put in the low of the day. And you could have traded back into the range if it was within, you know, the kill zones, which it was down here. If we just come, okay, yeah. So even here, to me, that just eyeballing it, right, not favorable at all. Of course, there's no clear market structure. If we do take out this high and we trade down, make equal lows, then we make more relative equal lows. These could be considered relative equal lows, but you could also say this is a relative equal low. That price just seems like it could sweep either side, and then we go into this tight range consolidation, right? Just these aren't good trading conditions. I told the second that I lost that trade, I got out of that trade. I told everyone who was popping up to me asking about charts, I told them, you know, not a good trading day. You have to know when to not trade. That's just as important as knowing when to trade. Because knowing when to trade, you know, sweep on previous daily high, previous daily low, all of these things that we anticipate them and wait. But wait till your setup is clear. Wait till you get that market structure shift. Till this day, I'll always repeat, that's the thing I always say, there's a reason it's the first lesson. The biggest thing is understanding confirmations. Why trade something if you don't have a confirmation? Right? If you don't have a good idea of the probability. When price gives you these market structure shifts, it must be at the right time. It has to be during the kill zones. And you want to see price come to that OT, come to your, you know, arrays. One last thing, right? Market structure shifts are reversal entries. And this is in the previous video how I showed you guys I caught trades here. These are continuation trades. I got in shorts down here. Continuation trades, right? Just trading the trend or with the trend. This is another form of entry. But as anything else, you need your framework. You need to understand what price has done. Is it likely, you know, price putting a high here? I honestly assumed this was, you know, the high of the day and price was going to be a bearish day. And after a while, when the trend line kept building, I knew it's going to get swept. But of course, I wasn't trying to be a part of that move. Why? Because it was against my bias. Why do I want to trade against my bias? And of course, in the end, I was wrong, but it's fine. We still came out profitable. And that's more important than anything, because I came out profitable while following my rules, not just randomly. So it's very key to have that read on price. One good habit that you guys can, you know, start incorporating, if you can wake up for London kill zone, let the price action form and paper trade. But paper trade as if it's real money. Don't just take trades for the sake of it. Don't paper trade trades you wouldn't actually take. The reason we paper trade sometimes, trades are out of hours and, you know, whatever. But if you're not at a stage, you know, you're not confident with all the things I said so far, then just paper trade. Get used to it. Observe what price does. Observe what happens around New York midnight. Observe what the London Judas does. What happens after the London Judas, right? How is the range, the opposite end of the range put in on a day? How is it put in on a week? You know, go back each week on the weekend and go look at what the week done. Which day made the low high? You know, which days delivered the expansion? If it's not what you typically expect, go check Forest Factory. Was there news? You have to think, you know, critically. You have to think logically. You have to take all the data that's around you, because this is just data. This is numbers and candles. There's news. You have to combine all those things, build a logical bias, then get in line with it. That's what we do. We get in line with it. That's about it for today's lesson. In the next couple of lessons, I want to get deeper into intraday teachings. The next lesson is going to involve a method to calculate protraction, how to figure out where the London Judas swing could be put in. So that should be a good lesson, and I'll see you guys with that very soon.